This is Fred Paine. I'm the senior agent with Private Family Banking Partners, and I'm here today to show you how you can get ahead by using the same dollar more than once, allowing the same dollar to do more than one thing for you. Let's use the example of purchasing vehicles, for example. You can save up and purchase a vehicle for cash, in which case you're going to lose interest that you could have gained. Or you can finance your vehicle through the dealership. Usually, they love to finance cars. They've learned that they make more money doing that than they do selling the car. And you might be able to qualify for a low interest loan doing that. But in either of those two cases, you're going to end up with no money and no clunker after you're through with a lifetime of purchasing cars. What I want to show you today is a better way to do that. By using our private family banking system, you can actually make money by purchasing your cars through policy loans that you build up and then pay yourself back instead of paying the dealership. And you might ask, well, why not get a 0% loan or a 2% loan from the dealership? Well, you know, if you read the fine print with most of those, what usually happens is they'll keep any incentives that the manufacturer is giving, which means you could have purchased the car for a lot less. And when you add or factor that amount back in, now you're not paying 0%, you're not paying 2%, it's going to be closer to 10%. There's no free ride when it comes to buying cars, but there is a better way. Let me show you that right now. Let's take a look at this first chart. Let's assume you're going to purchase a $30,000 car. You might purchase one for a little bit more, a little bit less, but just for purposes of this webinar, let's say you're going to do that for $30,000 for 5 years, 60 months. If you do that using your private family banking plan, you're going to pay 5% interest on that policy loan. Your total monthly payment is going to be $566. And after you're through paying for 60 months, your outlay is going to be $33,968. Now, at the same time, simultaneously, that $30,000 inside your policy continues to grow at a little over 4% right now. But let's just assume on the low end that you're only going to make 4%. For those same 60 months, that $30,000 is going to grow to $36,630. That's a $2,660 difference between what you're paying and the future value of your money inside your policy. You're actually making $2,660 by doing this. Now let's multiply that over and over again throughout a lifetime of purchasing cars. Here's that same $30,000 car. You're going to finance it for 60 months at 5% using your policy loan. You're going to pay $33,968. The interest that you've paid is $39.68. Okay? But again, inside your policy at 4%, you're making $36,630. So the gain of $26.62. You've actually made money doing a purchase this way. That's the power of compound interest. That's the power of using the same dollar simultaneously to do more than one thing. If you do that for 10 purchases, okay, at 5 years, 50 years of purchasing cars, your increase is $151,253. And over your lifetime, let's say 13 cars, yeah, 65 years of purchasing cars, but I'm planning on being here for at least that long. You're going to end up with, just like the person that financed their car with the dealership or the person that saved up and paid cash, you're going to end up with an old car. Unlike those other two people, you're also going to have a total of $320,583 more. This is the absolute best way of financing vehicles for yourself. And just imagine you can do this for a number of other things. But I wanted to show you this little webinar and show you these graphs so that you could see the power behind what you're doing with private family banking. Interest rates right now, gains in your private family bank are actually a little over 4%. Let's change that number to 4.3, which is about what your money is growing at right now inside your policies. And all of a sudden, the amount that you're making by just funding your vehicle purchases goes up considerably. At the end of your lifetime of buying cars now, you've got over $400,000. And so this is a better way. This is a way of putting you on what we like to call the wealth curve. Your money growing by itself is depicted by this red line. Using your private family bank just to purchase car is depicted by the green line. This puts you on what we like to call the wealth curve, where you're accumulating money that you're going to spend anyway. Everybody's got to have transportation, so you're going to spend it anyway. So why not do it in a way that maximizes the returns back to you? I hope this helps you with a little bit of understanding of why you're doing the private family banking system, or why you should do. If you'd like more information on this, or how to get started even, give me a call. My information is listed in the email that I sent to you. I'd be glad to build something that will be beneficial for you. Look forward to talking with you soon. Thank you so much.